I'd like to welcome my guest, Seth Carpenter, UBS chief economist, and he also formerly held positions at the Treasury and Fed. Seth, good morning. And of course, I'd be remiss not to have you weigh in on how UBS and your research anticipate the coronavirus to continue to infiltrate in market space.
Yeah, I mean, I think your earlier guests were right on that it's really hard to quantify things at this stage, but there's a clear worry in markets and having a big effect on sentiment, so that's totally important. I think the other part to try to keep in mind is people are always going to look for the effect in GDP, and when you think about the cost, some of it will be in the flow of spending, but some of it's just going to be in terms of you're going to see extra spending by governments to contain things, and that's going to go the opposite direction. So it has the potential to be disastrous, but I think we really need to see how it plays out before we're sure about the macro effects.
And it's a big week as well, of course, with our Fed meeting, and I find it somewhat ironic that we lost the two biggest uncertainties in the form of Brexit, which will occur Friday, and of course trade, which phase one was already signed. And even without coronavirus, Seth, I'm not sure the Fed would take those three eases away. Does the coronavirus figure into that at all?
I mean, I think this absolutely just gives them another reason to be cautious, to wait and see what happens. It does increase the uncertainty. But I don't think anything was going to happen at this meeting in terms of policy, even the statement. The key about this particular meeting is how does Jay Powell talk about the balance sheet adjustment and interest on reserves, because there they have a chance to really spook markets. The markets, there's a widely held sentiment that the expansion of the balance sheet was boosting equities, and now that they're on hold with the balance sheet and maybe even walking back a little bit, I think how he describes it could be another moment like the autopilot comment from December 18.
Yeah, no argument there. As a matter of fact, let's take it a step farther. The non-QE form of liquidity in the form of repos, and you mentioned what's going on with interest on excess reserves. Now, if they raise that, that is a form of tightening. It will affect its liquidity provisions and services it is currently rendering into the marketplace. Do you really think that'll occur even this meeting?
Well, I think it's a really close call. Our baseline view is that no, they will not increase the interest on excess reserves. But remember, they put that discussion into the minutes for a reason, to signal that it's on the table. Fed funds was trading only 4 basis points above the bottom of the range for a few days. That breaches the threshold they had on the opposite side just a year or so ago. And so it's clearly on the table. They will clearly discuss it. But I think right now they will say, let's err on the side of caution. If it's not broke, don't fix it. But all of the discussion about what to do, that's going to be the thing that could spook markets.
All right, let's get into the nastiest world of all, the world of politics. We notice, of course, that Italy, their Italian 10-year note has dropped quite a bit in yield and tightening the spread rather dramatically against bonds. And this all occurred because a more centrist candidate was elected. In the U.S., we see Iowa caucus numbers reflecting a surge for Bernie, which Wall Street Journal says is making many nervous regarding tax policy. Is politics going to continue to be a predominant issue, not only in Italian markets, but of course in the U.S.? Your final thoughts?
Absolutely. I mean, judging from the conversations I have with clients here in New York, in Europe, in Asia, everyone has their eye on politics, especially in the U.S., where I think people see a potentially wide divergence of paths between Trump on the one hand and some of the Democratic candidates on the other. I keep telling my clients, though, keep an eye on the Congress as well. What happens to the Senate is just as important as what happens to the White House.